Good evening, all. Ira Epstein, and here we are with your Spider ETF stock market wrap-up for one crazy trading day on the last trading day of the month, April 30th, 2025. So the day started off when we got our GDP, and the market was looking for a small amount of growth in it. Instead, it got a 0.3 of a point decline versus the expectation for 0.4. That wasn't good. Then we saw the PCE index numbers. They went up a bit. The market took the combination and nosed over early in the morning as the market said, finally, GDP is back. And how bad is it? If it's bad now, with this anticipation, what happens is now we get the full impact each month of the tariffs that are actually in place. They went on at the beginning of April, but now they're really rolling in there, and that's causing the problem. And everything stayed that way until about midday, and then the market started recovering, and right into the end of the day, it rallied. And I'll come to the rest of the story in a minute. Let's take a look, though, at what data you're going to get tomorrow. You're getting the Challenger Group. They're going to come out with the April planned job cuts. Now, ADP came out today, and instead of getting 125,000 new jobs, which was substantially less than the prior report, it came in at 62,000. That was another terrible number that added in at 7:30 into the negative. Now we're going to see what Challenger does. You're also going to get jobless claims for the week, and that comes out at 7:30. We're going to get S&P Global Group. They're going to release their final. The key word here is final. April manufacturing sector PMI. So it's a revision of the prelim. It's probably not super important. ISM number will be, because you're going to look at the April manufacturing sector index at 9 o'clock. You know, we are seeing the industrial spider has been lifting up. Construction spending for March. That's going to be released at 9 o'clock, and we'll get the natural gas number, which is looking at another gain of about 100,000 billion cubic feet. All right. So what took place now is in the market, we go in and we close. And today's the earnings day for Meta and Microsoft. Both are beats, and both show CapEx spending is going on. In fact, Meta upped it. Before they were looking for 60 to 64 billion in CapEx. Now it's 60 to 65. Now it's, I think, 64 billion. I'm doing this from memory, up to about 74 billion. So they're upping their spending at least 10%. That just takes now and kicks up all of everything that has to do with AI. And their conference call afterwards, all you had to do is listen. All they're saying is, they are reaping monster benefits. They're increasing prices for advertising. The AI is working. It's placing the ads. You're getting better results for the higher price. The bookings are coming in. And the worries about Shine and Temu that could leave them overpricing the tariff war. And they make up, from what I understand, about double digit, over 10% of the revenue. They're not seeing the big declines just yet because, remember, this company's everywhere. So you may lose it in one market, but you pick it up in another. It was a beat on everything, and obviously that kicked up at the S&P market right after the close. So those are the things you're looking at. Do we understand that? All right. Will Intel benefit? Hard to tell. This is a company on life support right now. They're not like Boeing was, where the turnaround began after all the things that went wrong at Boeing. It had to wait a while. You're at that stage where we're waiting for proof it's turning around. And you can see the market is no longer making new lows. Now, if it starts making new lows, it's clearly evidence something's not going right in the turnaround. Right here, I wouldn't be surprised if you have people tipping in their toe and saying, I want to see if the market can hold without getting back under that low. If it does, I don't know where I'm at. And it's certainly not a chart play that looks exciting. And the reason is, while you have higher lows, you have lower highs in the market. So you're really not trending. You're whipping around right now at this point. The market is fighting a major battle at the 18-day average. I call that the line in the sand. It's that number that I use when the market's over it to say there's upside bias, or under it, when it's under it, to say there's downside bias. It is the neutral zone, the DMZ, between North and South Korea. Think of it that way. And again, you don't have a trend at work, so I can understand it fighting right there. And the Bollinger Band's collapsing in. You want to know why? This break was all about volatility to the downside. This part, since that ended, is about the market staying in a tight range, and that gets the volatility out and it causes the Bollinger Bands to narrow in. And in terms of momentum, you've gone flat, which makes sense against the 18-day average of closes. O'Reilly picked up today is, again, I watched Phil LeBeau, who gave the best explanation that I know of on auto tariffs this morning on CNBC. I'm still lost. It's too complicated. I don't get it. I don't understand the 75, 85%, and then you get monies back from tariffs. It's too confusing. I don't know what it all means. And I've been watching different auto manufacturers, local and so on. People in Chicago, they're having trouble. If you want to order a car, let's say out of Europe or something, how do they price it? They don't know what the price is. Are you going to put money down on a car that when it gets here, you want that custom interior and paint? You don't even know what it's going to run you. The dealerships can't commit to cars that aren't built in the United States. Very hard time for people. Buy what's on the lot. That's why Carvana is so strong. Higher lows, higher highs in Home Depot, but overbought as can be. I think you're going to stay in this stuck area for a little bit. In Google, well, obviously, if Meta's good, Google's good. I mean, advertising is happening on search engines, YouTube, Facebook's, Instagram, social media. That's what's important, and more money's being committed to it. But the pattern here isn't clear. You have a lower low, higher high. In Netflix, it responded today back up another $6. This is what happens when you have an embedded reading. Traders come in on these little breaks and try to pick up the market. I teach that in my full charting course. And while Hood was down, their earnings after the market, I don't understand why they were down. And by the way, I don't know if they could be up by now. They beat on everything. They're attracting new money. They're getting new accounts in. They're bigger. They're getting better traders. They're making a lot of money clearly on crypto trading, option trading, futures now. There's all kinds of things they're doing. I'd be careful. Futures should be left to futures firms, in my opinion. Not because I'm in that game, but we have a pretty good understanding. It's great if you don't need to talk to anybody, and if you have a special situation, often trying to get to a help desk is near impossible, especially on a busy day. That's where futures firms come in for the help, a lot of it. In XOM, higher high, lower low. And you can see how the market's swinging back to the downside. I'm not friendly to the energies here. I think it's only a question if you saw today what happened in China to understand the game. China has what they call a factory gate number. Think of it as our manufacturing PMI, okay? It's the same thing. That's their term. Then they have a non-factory gate number, non-factory manufacturing. So the factory gate came in at a 49 reading. I don't know if an analyst had thought it was getting under 50. That's contraction. So as much as China keeps saying, oh, we're well positioned for the U.S. tariffs, why is the factory slowing down so much? I don't get that. Couldn't they massage the numbers later? Of course, they can do whatever they want. I never believe their numbers half the time anyways. But when we look at that, that set copper down 25 cents. I mean, you're talking a big break. That's a big break in the copper market today. And we are looking at this market unable to hold on. When we go to SOX, tomorrow it should probably, if the market continues through tonight to hold the gains that I saw in Meta, it should go up. Why? I saw NVDA go from down to up $2 on the news as it watched and it heard, oh, people are going to be spending more money on AI. That's me. I'm NVIDIA. You need my chips. Well, a lot of it's going to be software and the like, so Palantir, everything's jumping with it. Understand that this was a big part. The market was scared that these CapEx spending was stopping. I don't see that being the case. When we look at XLF, the financials, that too is probably going to get a bid tomorrow. I wouldn't be surprised if the market starts off higher on everything, but you're overbought. be careful. I think the pro money's going to come out of the financials at the 100-day average in the Bollinger Band. That's the odds-on play. Doesn't mean it can't go higher, and I am not saying go short, but that's the odds-on play when you hit that combination. Same thing can happen in the industrials here, right through here. You've got the 100-day average, the 200, and the Bollinger Band. Are we embedded? So if you take a look, both numbers were over 80 today. If you haven't taken my course, you want to understand this. Both numbers over 80 on Tuesday and both over 80 on Monday, so you're embedded. So when the traders come out, instead of coming out of their whole position, as I teach, it doesn't mean they'll follow me. I believe they'll take half, some percentage off at that number if it's offered the ability. And until the red line closes back under 79, it stays in a bullish mode. In XLE, again, I am not friendly energies. Think of how much energy China buys from Iran, Russia, and if their factories are seeing contraction, do they need as much energy? Just something you got to put two and two together with. In the gold market, where's the bad news? The fact that GDP was terrible, but the stock market's going up is weighing on the gold. At this hour tonight, you're down $30 an ounce in the evening session. So as I said, I would not be surprised, and I've said it since back here, that price and the 18-day average want to make a better run at each other. And I said that in the futures for the 18-day average. I still think that's a possibility. In the silver market, you've rolled over in your momentum, but you've been overbought. So I can see this market pulling back. The reason it too was down today, again, the factory gate orders, and copper got hit pretty good, 3%, because it was watching the futures, which got hit in a big number too. Maybe you're going to come back down here. But the copper market, is it embedded? Day one, both over 80. Day two, day three, it is. So this break is going to be interesting in the morning. There'll be an element of people that look to see how this opens. If it loses the embedded reading on the opening, nothing matters. If it doesn't, they may be early buyers of it to see, does it not close under a 79 reading? That's, it's a big gamble. Got to understand what you're doing. BND, obviously you're getting a rally in this market because things are of such that the market's saying, okay, we're seeing slowdown, GDP and all, no pressure on interest rates, but the economy's doing just fine. So a move back into these, I don't know. I think that a lot of money has been spent to drive it up here. I have my doubts it's going to stay up. Then in the dollar, I have been looking for a short covering rally when you lost the embedded reading to hit the 18-day average before you get down there. I've said it every night. It could happen. And FXE, well, if the dollar gains tonight, this probably when you open in the morning, maybe it makes a run to the 18-day average. That's what I've been looking for. I don't know if it'll occur or not. You hear me talk all these theories, but in the mornings, I say with specificity. Buy here, sell there, here's your stop, here's your profit objective, this is what I want you to do, and I track every trade every morning in the SPDR ETF, I track it in the futures video, and if you have my full research on futures, I track it there intraday as well. You can see what we do. Do we catch any of the moves? Do we miss the moves? Where do we go? You take a look yourself. It also includes my special reports, and I will do one tomorrow. I want to do one on Thursday, Friday for the weekend. That's why I like to do it at that point. Go to IraEpstein.com research. When you're there, you'll see this package. Sign up for it, and away you go. There'll be an icon up here. Give that a click as well. Take it from there. I'm Ira. You have yourself a great evening, and I'll catch up with you first thing in the morning.